All right, traders, it's the 27th of July, 2017. My name is Jameson. Welcome to Behringer Trading. We're looking at gold here. This is a daily chart. Let's knock this out. So we have a bullish ascending channel that's present. Prices have become a little oversold relative to that channel, and they're trying to re-achieve and continue this trend here, right? But let's take a look. The cumulative delta is pretty neutral. We can see that as prices are re-achieving the lower trend line here, that there's actually some selling pressure here. There's a bearish divergence. So it looks like they're selling in the strength. It's very important because if we're actually in the process of backtesting a prior level of support resistance, it's very distributive. And if this is distribution on a lower time frame and it spills into this daily time frame, we really could see gold drop a little bit lower. I've labeled or measured the up waves and down waves. So we have 3 up waves, 1, 2, and 3, and we have 3 down waves labeled. We can evaluate the effort that's been put in. So on this first up wave, we had 4.3 million that went into it, and then 4.2, and then 3.6. So you can appreciate that the buying effort or the participation in the highs is actually contracting. And if we do the same for the down waves, we can see 2.2 million, 3.8 million, 4.5 million. So we can actually see that supply is expanding, demand is contracting within the limits of this bullish ascending channel. That's distributive. All right, so let's look at a lower time frame here and see if we can draw some conclusions on what's going on here. All right, so now we're looking at a hourly time frame, and we obviously can see the bullish ascending channel is present. We can see when prices become overbought relative to that, and they trade laterally, if not lower. So let's look at the character which they're doing so. So we're seeing a lot of effort that's going into achieving these highs. We have demand, demand, demand. Here's a lot of demand here that barely was able to make a new high. That looks pretty distributive. And then now let's see here, we're rallying higher. We can see the effort's kind of contracting here in the volume, kind of go higher again. There's no demand, so we can see that demand here is contracting. And then now as we break down, here we are. So now we're starting to see some supply. The supply is overcoming demand. We have a sign of weakness. Here's a last point of supply here. We break down. There's not a lot of sellers. We trade in the lower trend line and the point of control, which was bought. And then we rally higher in a big effort that barely achieved new highs. Again, little suspect for distribution. And then now we retest this upper trend line here, retest and make a little bit higher highs. Look, no buyers, no participation. We break back down, we retest it again. Again, no buyers, contracting demand. And then supply presents, lots of supply. And then we rally higher, we test it. Again, no participation. Buying climax, automatic reaction, secondary tests. This might be our up thrusts. Up thrust after distribution. Here's our sign of weakness, last point of supply. It's looking distributive. I anticipate prices are going to trade down this lower trend line on the hourly time frame. If we lose this and lose the point of control, that's going to spill into the daily time frame, which may then result in prices breaking down further. Now, additionally, we can see, we've looked at price, we looked at volume. We can see the cumulative delta is showing that there's been some distribution since this beginning of this train range here. So it looks like we're seeing some distribution. I am bearish on gold.